Welcome back, traders. It's time for another recap for Thursday, February 2025. You can see the time, 9:03 p.m. Hopefully, I can run through this pretty quickly. So, what happened today? Here's the SPY, daily chart of the SPY. And one of the levels on the board today was where this trend line was here on the 1-minute chart. So, essentially, I picked 611.72, I believe it was, and said in the game plan in the morning, which I'll show you in a minute, that if price got below that, that was probably a good sign for the bears. If they could get above the trend line, obviously the bulls were still in charge because they poked their head above it yesterday. Well, they opened below it and they stay below all day. So what does that mean? Well, on this 60-minute chart, this hourly chart, there's a breakdown candle the first hour of the day. Price climbed up inside the body of this candle. So several things are in play tomorrow, or could be in play. If price gets up to the bottom of this trend line and the bulls can't defend it very well, this has the potential of playing to the downside. The bears could push the price down farther. Just depends on what happens because this trend line's been important and they have to get above it. But all day long they were below it. So currently it doesn't look too good for the bulls. And I did mention some divergences that were happening on some other indexes, and most of those are down on the day, even more so than the SPY. So something to consider. This trend line, I called it 611.72, was important. And you can read through the game plan. You can see that I said that if the bears get price below that trend line, it's kind of like an axis point that the bulls would want to be above, the bears would want to be below. So when we take a look at what price did early on after the open, it's kind of a good sign that the bears probably had the ball early on. So we'll go over to our 1-minute chart. The vertical line is a close of yesterday. So price opened right here at 9:30 in the morning. And they went up. Now, if we pull this level down, 611.72, this is the trend line. This is where it would have been, or this is where it was today. If we pull this down 5 cents, we'd be at 611.67. Is that right? And it just so happened that a few minutes after opening, like 2 minutes or so, third minute, they went to a high of 611.68 and just pulled down like crazy. Now, so if you saw this happening, they came down, there's a near miss here. They got within 10 cents of this. They got within 10 cents at the top extreme of this zone, bounced up enough for a base hit, so that's a near miss. And this momentum happening, you probably wouldn't want to jump into this level here at 609.67. Just understanding that the bears have the ball, they're under the trend line. You've got to be looking at the big picture to see what's going on. This is just a 1-minute chart. But I just want to point out that probably wouldn't have been smart to trade this after getting this signal here and this signal there. But nonetheless, we're going to count this as a trade because I want to keep things consistent. If we went long here at the bottom of this zone at 609.67, price would have been all the way down here at 608.25 or 608.30 if you want to adjust it. And if you bought here again, this would have quickly put you at that 20-point max loss limit. So you would have been out of the trade. Fumble here. By the time you got down here, you're 20 points in the hole. You jump out and take the loss. So this level here, while it did bounce, obviously, if you traded this, and I'll show you the trade that I took here. There's a recording of a trade that I took here, actually. You would have done nothing until they got under 608.30. So just enough time went by between when they got under the level and they're coming back up into it. And they're coming up into it the right way. So going short at 608.20, because we're going to take 5 cents off of the level for the morning. Going short there would have given you a base hit of at least 4 points when they fell. So now you've gone technically long and short at this level. You're not going to do anything else with this level. But when they come back up to this zone, market acted like it was important here. But we know it's important because of how we derive these levels. So it shouldn't be surprising when price got up to the zone again and you went short expecting a recycle trade, expecting a reaction down the other direction. For a recycle trade, you would have been rewarded. So you're going short here, you're going short at the top. So your average entry price is somewhere in the middle, and you would have had a base hit when it came down to this point. And they went farther, but that's 4 points. So yes, you would have lost 20, and you would have gained about 12 points back. So that's playing by the rules, giving some points back, ended in the red. It happens sometimes. But overall, the rate of return is still pretty decent. So here's a recording of my trades, or at least what I did today. So started recording before the opening bell, and I was away from my computer, talking to somebody, kind of busy with something, and it was about 9:52, 9:53 or so when I got back, and all this had already happened. They fell into this. I had no orders pending. So I'm going to pause this as soon as they fell about here. So it was in this neighborhood about now, within a minute or so. I saw what was happening. I got back to my computer, and you see a bunch of action going on. I'm just kind of doing some quick analysis here, saying, "Oh, these levels have been done. I'm not going to trade them at this point unless they come back up into it later." So I just made them dashed or dotted here, but I did go long at 608.30 and see how close they got to my profit target here of 4 points. And so what I did is, by the rules, is I'm not sure if they're going to continue to go higher if they come down quickly to my entry point, which they did. They actually went below, and I jumped out at actually slightly better than a wash. It was like almost $20 or so. Looks like it just disappears. It was because I closed the order out right there. Because I wasn't sure if they're going to continue this momentum and go down farther. Turns out this was a decent bounce area. So now I'm looking for them to go short up here if they get to the zone, and they didn't get there at this point. But when they got down under 608.30, I'll just move ahead here. I did go short, just like we were talking about, for a recycle trade, and I took 7 points off with 2 contracts, and that worked pretty well. And once that happened, I was done. I mean, I made a little bit of money, and better than what we're going to show you in the play-in by the rules log, because you would have given money back. But it just comes with the territory. It's part of the game. So I let this go until I got back from lunch or so, 1 o'clock, a little bit after 1, and I stopped this. So no more trades for me. I was happy to get what I got. So you can read through the notes. Hopefully it makes sense, but I'll just explain really fast. The reason the colors look kind of wonky here is because while there was a fumble at level 2 and it went down, and level 1 would have triggered or would have caused the 20-point max loss limit, these same levels gave a base hit on their way back up for recycle trades. You can read how that works. So 20 points negative, 12 points positive. There's where we would have landed trading 2 contracts. So yesterday, for some reason, I was thinking 20 points when it should have been 16. It was 4 base hits. I fixed this, so it brought it down to 41% or so, a little bit more than that for rate of return. So this has been corrected. So with the loss today, it brings us back down. So we're slightly under 40% for the rate of return so far this year. And then on my trades, it's just the one level that I traded, and I got a wash the first time and then 7 points on 2 contracts the second time. So slightly more than $700, but close enough. So tomorrow could be interesting. I believe there's some data releases coming out in the morning. Yes, there's PMI numbers at 9:45 a.m. Eastern. And there could be some things at 10 o'clock, but at the 9:45 is what matters. Consider what they did today, and also consider what they do overnight and where they open in the morning. A lot of factors come into play, but we could see some action in the morning. I'll try to have a good game plan in the morning based on what I see. And levels, of course, that work most of the time. That even with a fair amount of givebacks in the month of February so far, the gains are pretty solid over time. So that's a wrap. Thanks for watching. Hope you found some value in this. I appreciate the feedback that I'm getting. Please continue to do that. Give me your opinion or thoughts on this. And if you're trading these levels each day for yourself, I hope you're getting the hang of it. I'll talk to you again soon. Have a great day.